Hi boys and girls, it's Shane, and look at my stack of credit cards. This could make Dave Ramsey cry, I promise. And I'm going to teach you about building credit and how to get a better credit score and kind of the rules to the game. This is something you can do. Don't tune off. Stick with me for just a minute. If you can play a video game, if you can play a board game, you can learn to end up with a really high credit score that's going to give you a lot of ability. And having a stack of credit cards is not a bad thing no matter what Dave Ramsey has taught you. So I'm going to try to fix a couple things in your brain and help you to understand how you could buy houses. Like I bought a house last month on a credit card with 0% interest for the first year. I'm going to teach you how you can do things like that or just better your financial situation so you could buy your first home or be able to get a better interest rate on your car. It'll just make your life better if you have better access to credit. So here we go. And the way this works is you need to understand the rules and you need to treat credit like a game because your credit score, we call it a credit score. When you have a score, you're playing a game. And you can win a game. You can get more points if you learn the rules to this game. So treat it like a game. It is a game. So your credit score is calculated around 5 basic things. But we're going to focus on the 3 that are going to matter the most to you. And the reason why I have this big stack of cards will make sense. So one of the first things that matters is on-time payments. So people will say, oh no, Shane, I don't have good credit because I made a late payment. It's not about late payments. It's about on-time payments. So it's the on-time payments ratio to late payments. I'll explain. Let's say you have one credit card, okay? And this one single credit card you use for stuff, you make one payment on it every month. That's 12 payments a year. 12 payments at the end of the year. If you're late on one payment, almost 10% of your payments are late because 1 out of 12 is nearly 10%. When you go talk to a bank about getting a loan, they're going to say, I'm sorry, you're terrible. We'll never lend to you because 10% of your payments are late. Your score is going to be in the toilet. You're never going to be able to get a loan. However, you could have one late payment and have a whole slew of credit cards where you're, say, 10 or more credit cards. Now you're making 120 payments a year on your 10 credit cards. And these could just be $5 payments. They don't need to be big payments. And you have one late payment out of 120. That's less than 1%. You could have a 750 credit score and have that one late payment. The difference, you had more credit cards available, so you're making more payments on time. This also, of course, counts for car loans and other types of credit. Anything you're making a payment on time on, relative to the number of late payments. It's a ratio. It's important to understand that. When you understand that, you realize then that the more credit cards you have that you're making small payments on, the better. If you have one credit card you're putting $1,000 a month on and paying it off, that's worse than having 10 credit cards and putting $100 on each one of those 10 credit cards and paying those 10 credit cards off. It's still the same $1,000, but it's worse for you. I'll explain one more way that this is bad, and that is the second way your score is calculated, which is your credit utilization. So people will say, oh no, I'm using $5,000 of credit, Shane, I'll never have good credit. I got to pay this off. No, it's not like that. There's rules to this game. Using $5,000 in credit, if you have $6,000 of credit total available, is a huge utilization rate, and you're a terrible person and will never lend to you. But if you have $5,000 of credit that you're using, and you have $25,000 of credit available, you're using 20% of your available credit. You're a great person. We'll give you a loan. We didn't pay anything off. You still have $5,000 owed. The only difference is you have $20,000 more available credit because you have a lot of credit cards that you can stack on top of this versus just having that one credit card that's got a $6,000 limit that you've used $5,000 for. So getting more credit cards will increase your available credit, which means without paying things down, your credit score will go up. Okay? So number of on-time payments goes up by having more credit cards. Amount of available credit goes up by having more credit cards. Both of those things help to boost your score. The other thing is going to be credit time, like the length of time that you've had credit. This one we can't really cheat necessarily, but when we're aware of it, we can think about it. So the longer time you've had credit, the better your credit score will be. And this is also on an average. So if you were to open a whole bunch of accounts today, there's going to be a drop in your credit for a little bit for inquiries and also for having a lot of fresh credit accounts. But every year that goes by, as these cards get older, my credit is going to go up. So 5 years from now, all these cards are over 5 years older than they are today. My credit score is going to be much, much higher than it is today. So when I open credit cards, I want to open cards like this is my Discover It on top. It costs me nothing to have this. If I don't use it, it doesn't cost me anything. I can have this card forever and always have it open, always make an on-time payment on it, and this will age well. So we want to get as many $0 to hold cards as possible. Then, to keep your utilization up when you're playing this game, you will find, so let's start from 0 credit. The 2 cards you're going to look for are going to be the Open Sky card, and you can just look this up in a search engine, search for the Open Sky card and the Indigo MasterCard. Almost every single person watching this video will get approved for both of these credit cards. Get them. They will be small limits, and that's how you're going to start off as you're building from very little credit. Then put your Netflix on it, or put some other small bill that's going to be $10 a month or $15 a month on that credit card. Set it to go to that credit card instead of your normal bank account. At the end of the month, when your statement comes, set your credit card to automatically pay. So you wait for the statement to arrive, then your credit card automatically pays. Don't use your credit card for anything else. At the end of the month, you'll have a small utilization of your total credit available, because you'll be using $15 out of $200 or $500 available, and you'll have an on-time payment. You do that with both cards, you'll have 2 on-time payments, and your credit utilization will be low. Your credit score is going to go up. Once you get your credit score 670, 680, you can start looking at cards like Discover It. You'll apply for the Discover It card. It'll be free. You can have that the rest of your life. There are several others that you can use. I also think the Prime Visa card is a really good one to get. It's not free technically, you have to have a Prime membership, but all of us have Prime memberships anyway for the free shipping. Then try to get as many credit cards at once as you can once your score gets higher. So I'll have a random day and I'll apply for 5 or 10 credit cards every so often, and I'll get 3 or 4 of those applied for. I won't get every one of them, I'll get turned down for some, but I'll apply all on the same day. That way my credit inquiries are all focused on one day rather than spreading it out over time. Like if you do it every few days, all those inquiries are going to hit your credit and it's going to lower your score, because the number of credit inquiries definitely impacts your score. Also, if you have existing credit cards, you can call them up. They're all going to have a number on the back. I'm not going to show you my number, but there's a 1-800 number on the back of this card. I can call that 1-800 number and I can ask for a credit limit increase. And you're more likely to get it over the phone than you are to get it through the card app itself. So don't be afraid to call and ask for that. If you increase your available credit, then that also improves your score, and it does so without impacting the age of your credit. Do those things. After a year, your credit score will go up hundreds of points. I've seen people go from a 550 to a 750 in about a year using this method, and you can too. Share this with people. Everybody needs to improve their credit. It's going to make it easier for you to buy homes and easier for you to handle your future finances.